18409.25. That would be your second partial. Let me just took out the internal range buy side, swept it, closed all the way back below. So realistically, we should not reach back into this imbalance. I like to see its speed as we reach down for the PM session low. So now I'm anticipating as the sweep of sell side red at 930. I want that to come and just burn all the way through all the sell side. Trading into a 15-minute gap. I've outlined here. And then as we trade into the 15-minute gap, I'm watching this candle here. And then we're using the Cameron's model of it as it trades into a higher time frame gap or a higher time frame swing high or swing low, swing point. We want to see that next candle print to be a down closing candle. So this one prints into the gap, fills it. This one prints below. So I'm looking in this next candle that prints for an imbalance, which would be in here. Fills the imbalance, takes out another swing high, and then same exact kind of fractal in here too, right? You could be looking for a 1-minute market maker model on a 15-minute PD array. So preferably I do want to see this order block here hold as we continue to the downside. Using the really like the 920 to 940 macro. And the basis for that macro is there's a macro between 820 and 840 using the 830 news. So I assume there's definitely one, and I've seen it before multiple times. Different people have talked about it. This 920 to 940-ish macro. I mean, it's just really just using the 930 volatility. And nice sell off there. Wanted to reach down into PM session low. There's our first partial. Moving stop to break even. I wanted to run just a little bit further into 409, if that's possible. There we go. Thank you. And I mean, that's the day, right? That's the whole business done and dusted. Pretty simple stuff. I mean, you're really only looking at a couple time frames in the morning. It's going to be your 920 to 940-ish macro time. We're really just using the 930 volatility. We're going to be using 950 macro and maybe the 1030 or 1030 or 1050. It depends on the day, because if there's a day where you're anticipating 1030 below probability, give it the maybe 830 news, you don't want to be trading around 1030. 1050, it really just depends on the day. But optimally, you're going to be using 930 volatility and 950. You can actually start up the stream here. Turn it upside down. Morning. What's going on? We'll wait a couple minutes here, and then we'll get things going. All right, we'll get started. Morning. Hope you guys are doing well. So I sent out the daily bias post. I'm bearish this morning. Well, we got really the bearish mood I was looking for. And if we'll do top down. If you take a look at the hourly chart, right? So weekly profile is Tuesday classic expansion. We have a Wednesday reversal occasionally, or a Thursday reversal. So every morning I'm checking Forex Factory, looking at the news. So today we have no news, and tomorrow we have 8:30. So that typically produces not low probability conditions, but difficult conditions today. So I'm going to be careful of that. I'm already basically done for the day with that 9:30 market maker sell model. Yeah, right now I did. Super clean. But if you look at the daily bias, we have obviously this high piercing the external range buy side. And if you look at our 3-day look back to 1, 2, 3, we're pretty bullish from our 3-day look back. We're trading to this gap here. And then if you look at our, look at this fractal in here, right? Swing high, higher swing high, lower swing high. So that right there is your long-term high or intermediate term high as we fill the gap. So as price is doing that on the hourly chart, look at our 15-minute chart. So keep that in mind. We have a swing high, higher swing high, lower swing high, or even in here, right? This becomes kind of your long-term high. We're bearish on the 3-day look back. We're bearish using this, as well as London session clearing out the buy stops from Asian in previous day PM session. Came up here, filled this gap, came down, filled another gap. So that's why I was able to pull the bias to the south side, looking at this bisi, looking at this sell side pool. And then obviously your kill zone between 8:30 and 11. You're really looking for one 15-minute candle to do something. And yeah, obviously, big deal. But you're looking for either a gap fill or sweep and stops. This applies to your ATM model where you're really looking for, if you want to, bread and butter cut out for you, 15-minute. Well, obviously you need an hourly DOL. Then you need a 15-minute fair value gap or a run on stops. And these typically occur, well, you want to see them occur in the kill zone, but a lot of times the sweep on stops, it's going to occur at 8:30, 9:30, or at 10, right? Then you're looking for a 5-minute CISD or a 5-minute reversal candle and a 1-minute market maker model. And that's your whole framework. That's really the framework I'm using. So if we look at, I've got the hourly and 15 pulled up on the left side, but let me pull up the 15 right here. So we're expecting downside. And I don't really care that we've already swept out this London low. Yeah, you could expect some sort of reversal here, but we're not using, just because we swept London low, we're going to reverse. Just because we take out a session pool doesn't mean we're going to, go the other way. And don't use session pools and don't use specific time-based liquidity as like a pattern. It's just how you're not going to short every fair value gap and long every order block. You're not using these session liquidity pools as something to trade. So obviously you use them in context with other stuff. Anyways, bearish drawn liquidity, we have 8:30 to 11. We're looking for one 15-minute candle to do something. Well, if we're bearish, we want to see either a fair value gap or a run on stops. Trades up into this 15-minute sibi during the kill zone at 9 o'clock here. And as soon as this candle closes, right, this 9 a.m. candle, I'm then going to the 5-minute. And that was what, 9 o'clock or so. I'm looking for that same kind of imbalance in here. And I'm looking for a reversal candle, which means as soon as we're trading up into that gap or as soon as we're taking stops, I want to see the next 5-minute candle print the other way. So in this case, if we're trading up into a gap, I want to see that next candle print low, right? So it's going to be down closing candle. And if you're familiar with Cameron's model, that's basically what he's using on the lower time frames. So as soon as we print that candle to the downside, I'm then looking for a 1-minute market maker model, 1-minute MMXM. Morning. How are you doing? Because we know that every single time a 15-minute liquidity pool is ran or 15-minute fair value gap is traded into, we can expect a 1-minute market maker model, right? So there's kind of this idea of time frame pairing. So your 1 hour goes to your 5-minute MMXM. Sorry, 1-minute PD array goes to your 5-minute MMXM. Your 15-minute goes to your 1-minute. I mean, you can drop this even further. Your 5-minute goes to your 20-second, and your 1-minute goes to your 5-second. Now think about what you can do with these two intraday. You get a 5-minute fair value gap that's ran into, or a 5-minute run on stops. You drop down to a 20-second. There's a market maker model right there waiting for you. Anyways, but fill the gap and then able to trade into here. And I was looking at this, basically your unicorn setup, right? So as soon as we're down closing here, that's at 9:15. We're looking for a 2022 or a unicorn setup. Breaks down. We have an imbalance here, trades up into the imbalance, run on stops. Same kind of fractal in here, right? Run stops and trades back down. So then I'm looking at this order block. Entered one on this tap, really around here. Another one on this tap. Stop above the high of this one reversal. Took profit here, and then also at the PM session low. Yeah, no problem. So bearish bias on the hourly using market structure. We have a higher high, or a high, higher high, lower high. So that's your swing high within a hourly imbalance. And 15-minute fair value gap traded into right in here. 5-minute change in state, 1-minute market maker sell model using the 930 expansion leg. And I'm really only looking at 3 to 4 specific time windows, and that's going to be around 930 using volatility, so 920 to 940, your 950 macro, which you know about, and then either 1030 or 1015. It depends on the economic calendar. So today we'd prefer to use 1030 over 1050 because we have no news and we want to see that steam run out around 11 o'clock. So, as we get later into the session, it's going to be lower and lower probabilities. But there's your 15-minute drawn liquidity hit for the morning. I think, what did I say? 18,380. Yeah, there you go. Yeah, all good. Next one will show up soon. So now you're just looking at, all right, we're looking at this 15-minute candle here. Let me pull up the 15 on this one. We know that we already got one trade idea. We're just looking for if there's a possibility for a second one. Well, we just tapped into a 15-minute bisi. Now what you could be doing is looking for a 5-minute candle to print the other way. So as we tap this one, I prefer to see a next candle trade a little bit higher and close as a bullish candle. And then obviously you could be looking at a potential market maker buy model in here. Only thing I don't like is the fact that we have this large gap, which could create high resistance structure. Good morning. Let me send a screenshot really quickly of the trade, the futures trades. So there's the execution if you want to look at that. Took it on another screen. So shorted one, a little late. I was looking at that breaking structure. And then shorted another one as we filled the gap and started trading back lower. Both with market orders. Took one off at sell side, took one off at PM session low. All right, so we're still filling this gap, holding the bearish order block here. Outside of the preferred time window. Still have sell side outlined in red down here, which is your lunch low, I believe. Yeah, lunch low down at, what is this? 18,323. Did you take the pre-open trade because there was no news this morning? No, just based on the framework. If there was still news today, I would feel comfortable taking that no matter what. But yeah, if we have no news, we're expecting that 9:30 to bring about a little bit more volatility than, let's say, yesterday. Yesterday, we have a large candle coming in at 8:30, CPI numbers, smaller candle at 9:30. That being said, it's still a decent candle, 20s, almost 30 points. But there was not a huge framework to build around this 9:30 trade. That's why I preferably want to use the 9:50 macro. But I don't know what the heck happened here. Why is this? Is this the wrong time? Oh, I would explain it. Thought I changed these yesterday. And we sell off a little bit further. Right, exactly. And it's when you realize it becomes almost dumb, like how rinse and repeat it becomes, you'll see it over and over and over again. And the important part is not to get glued to this 1 minute chart, because this 1 minute chart means absolutely nothing until you look at higher time frames. And everyone's pushing higher time frame bias, whatever. It's annoying, but it really does help when you have some sort of either a 15-minute or an hourly drawn liquidity. I'm not telling you have to go all the way to the 4-hour and daily, because for me personally, that doesn't make a whole lot of sense. I can have a daily bias that's bullish, then I drop down to an hourly chart and it's bearish, and then I'm going to be confused. And really, I think if you're looking at intraday scalping, the 1 hour, maybe the 4-hour, if we're approaching all-time highs, things like that, the 1 hour is going to give you all the context that you need. All right, we're looking at maybe 3 1-hour candles for our session, and the 15-minute is just a bellwether bread and butter chart, and that'll give you a ton of information. And you can kind of see the market maker sell model completing as we reach down for 323. But yeah, then you start stripping it down. So once you see the 15-minute imbalance fill or the 15-minute sweep on stops at a specific time, now your reversal structure you want to see happen either at 8:30, 9:30, or 10. That's going to be your highest probability that it is taking stops and then reversing. Your imbalance fills can happen at any time between 8:30 and 11 o'clock. And that's going to be useful when you're trying to frame setups as continuation into 8:30 or 9:30. But if you start taking those screenshots of every day from the hourly chart, 15-minute, 5-minute, 1 minute, then you'll see these patterns over and over and over again. I reckon we're going for the lunch low. I like it. I don't think we would stop in here. We could see retracement back up into this imbalance. The only thing I have against that, reaching for the lunch low, is retreating into this gap here, which the bottom portion wasn't technically efficiently filled with candle bodies. Dropped down to a 5-minute. It was pretty filled in here. So we should still see it sweep through here. I'm anticipating, though, it retracing back into this 15-minute bisi, creating some sort of a up closing candle and then running down. But yeah, lunch low should be target 323. And if you want to set up that forms almost every day, not every day, but almost every day, it's going to be your 950 macro. And that, you know, you could be looking at different profiles, but there's really only two, and it's going to be continuation or low risk entry. That's going to be your highest probability 950 macro setups. And you're still using the same framework, 15-minute, some sort of 15-minute PDRA, 5-minute change in state, 1-minute entry. So your opinion on the 950 macro then? Should we expect it to bounce up to that small fair value up above for shorting? As long as we don't take this sell side pool out, then we could see a retracement and then dump off into the sell side. If we take this out in the next 5 minutes or so, and there's not a secondary entry, I'd be careful, and you could look for a potential reversal going into 10. But yeah, I mean, just still hold the bearish bias. I'm looking at the 15 over here. Hourly looks all right. But yeah, just look at your 15-minute chart and mark out those. You could mark out the consequent encroachment of the 1245 wick from yesterday. But we're trading into this 10:15 a.m. imbalance. If I extend this out over here, there is this one. And remember, today is supposed to be somewhat low probability. Big SMT between ES and NQ. Oh, yeah. Lots of bullish SMT there. Also, 50% of the macro dealing range at CE of the 1245 wick. Yeah, so we could anticipate some sort of a bounce here. And if you look at the 5-minute, there's no clear imbalance in here. Now, also remember that with a 930 true open, you'd like to see some sort of a Judas swing form between 930 and 10. Right, and I don't think this tiny wick would be the true open. I mean, if you want to use 830, you can use that, extend that price level out, 830 open. I don't have an 830. Also mark out your RTH gap, which I assume, yep. So we gap down, mark out 50% of this if you want. I would find it weird though if we went all the way back up for let me fix this really quickly. If we went all the way back up for this high, especially since we created it as an intermediate term high. But if you look on the 5-minute, we've created a swing high here, another swing high here inside a gap. We should create another swing high on the 5-minute, either as we fill back up into this gap or as we fill this gap here, and then it continues back down. When you say there's a weekly profile as a classic expansion, then this down move is the Judas swing, I would actually anticipate this being the reversal structure on Wednesday. I want the weekly profile to be, this is the high of the week, and we continue down. I mean, if you look at the higher time frames, this sweep here, I assume, is a potential quarterly shift as we dump into April, create a low around April, May, using 60-day look back. If you look at the daily chart really quickly, we're pretty overextended from the 60-day. You can go back and look at whatever I think it's maybe this low potential quarterly shift, or you have all these sell side pools in here. So if we wanted to continue down and we form this as a swing high here. So if Thursday was to print bearishly and we don't take out this high, we have a high, higher high, and a lower high. That would be your intermediate term high or long term high. And then you can anticipate this being the quarterly shift down into sell side targets. So if you go back to the hourly, I mean, Monday reversal is in a pretty high quality profile. So this low being put in, I assume, is the next target as we continue into 8:30 news tomorrow. Tuesday didn't take that low out. We're trading up into a large imbalance, holding the balance, and creating a swing high in here too. So I would like to see it just dump all the way down. So if anything, the London protraction was the Judas swing. This up here. See how we ran up, took out stops, and then dumped lower, held the imbalance, held the breaker in here, dumped off. Classic New York expansion. Yeah, no problem. Holding this volume bounce here. Pretty weak PD array. So as prices tapping into that and holding, it should indicate to you that pretty weak. Because there's something as volume bounces are very weak compared to other PD arrays, right? Order blocks are probably your strongest, your value gaps being second strongest. And you can continue to move on, premium discount such, but volume balances are extremely weak. That's why they're the most flexible. You're not going to use them as a shorting opportunity all the time. Still want to mark those out. But if you see price holding these like this multiple times and we can't get through even that up to a value gap or up to an order block, that should tell you something about the structure. Obviously, if we were closing up like this, I'd prefer if we were to tap back into here. We're not trading into a 5-minute imbalance. Watch this 5-minute imbalance too, but split those, drag them out. And if you wanted to, you could drop down to your 20-second chart. And there's a possibility that it's a 20-second market maker sell model. This model also applies to every single time frame. You use basically just 3 time frames. One is a drawn liquidity, one is a supporting time frame, and one is an entry time frame. And you can go super low to a 15-minute drawn liquidity, a 5-minute PD array or 5-minute market structure into a 20-second or even a 5-1 5-second, 5-minute, 1-minute, 5-second. And you think about, okay, how many times do we fill a 5-minute imbalance within a kill zone? It's got to be like 2 or 3 times, right? And each of those, as long as they're in line with the drawn liquidity, creates a tiny market maker model. And you can just drop into the lower time frames, 20-second chart, something like that. And you look for the same exact stuff you always look for. Unicorn, basically invalidation of a previous order block, so that creates a breaker or a market structure shift. And then a fair value gap entry towards the drawn liquidity, which is basically just a retracement beginning point. So if we were tracing into a 1-minute gap in here, right, fills it, takes out buy stops, traces back down, we have a breaker in here somewhere, shorting in here, targeting this low, and obviously the 15-minute drawn liquidity down here. Exactly. And the ratio most times is around 12 to 15 to 1. meaning if the higher time frame, quote unquote, that you're using, if you split that into 12 or you split that into 15, that's going to give you a range of where the market maker model is expected to form on that time frame. So if you think about, okay, the hourly goes to the 5 minute and the 15 minute goes to the 1 minute, then your 1 minute will go to your 5 second and on and on. I want to see this used as a bearish order block. And we should spool down. Extremely weak. We tap into this 5 minute imbalance here. 15 minute is showing no willingness to retrace back into that 15 minute gap up here. As long as we're holding this bearish order block, we should see expansion through 335 and then into 323. Although consolidation between 945 and 10 like this, we do have to be careful of a Judas swing. So maybe it pops down, takes out the sell side, and this completes the Judas swing here. We may retrace back up into inefficient portions on the 15-minute chart. And I don't like, if you look at the 15, we pull this up here. We have a sibi here. Extend that out. We have just selling through there while we're dipping all the way through. Use it as a bearish order block there. And there's your sell side run. So if you're able to capture that entire thing, what is that? 120, 100-ish points. For a no news day, that's pretty solid. I know that 950 is crazy, right? Right up from the volume balance into the 5 minute. It's also a 5 minute gap here. If you were to see that too. 5 minute balance there. Wicks up into it, starts closing back below. And you could be short really on this candle if you wanted to. The 956. 20 points, partial 25. And that's done for the day, right? 2 high quality setups given within areas of time. Your 920 to 940 macro, if you want to call it that. Really just your 930 expansion. And then your 950 macro. And you want to hold the bias until there's a reason to be wrong. Just because price is, stopping here doesn't mean our bias is wrong. It's just a retracement leg. And you can see how weak price was with the fact that we were holding this volume imbalance and all the candle buys are closing below. And we just wicked up once into the 5 minute gap. And we're just dumping all the way down now, even past our target. Now, if you just took partials here, or if you took a full pull here at 18,323, are we upset that it dips lower another 20 points, or are we upset it continues, 100 points potentially down? No, we gotta stay solvent and stay rational as we think about missing moves. Like I shorted up here, took my partials, and I'm done. I'm not upset that it ran all the way here. It's just everything outside of the model becomes noise. So even if this isn't your model here and you didn't short this, don't feel left out and think that, oh, I missed an opportunity. When in reality, maybe you weren't even looking for this kind of setup. Instead, you were looking for upside movement. And if you're able to, it's more important to stay disciplined and patient than it is to capture every single move. So if you were anticipating a reversal here and it trades up into this gap and you were not given that opportunity to short from here, and it gave an opportunity here and someone else was looking at that as a short, don't feel left out. If anything, you should be proud of yourself for staying disciplined. 30-year bond auction at 101. I think is it 1 p.m. or 1:01 p.m.? Certainly it's at 1:01, but yeah, 1 p.m. regardless. So if you're trading the PM session, that's going to create a decent amount of volatility and probably some consolidation prior. So between, I would say, probably late into the lunch session, most likely between 12:40 and 1 o'clock, you'll see some consolidation or even a setup. And you can use that red folder news as a expansion towards target, just like you use 10 a.m. news. But nice 15-minute market maker sell model there. By the way, if you have multiple screens up, or if you have different windows present, you can actually toggle this little setting here. So if you click on this, this is new drawings will sync to layout, and then new drawings will sync globally. So on my hourly and 15-minute charts, I have it synced to global. So if I were to pull a level or a fair value gap from that 15-minute chart and extend it over, something like this, it'll disappear. But if I draw something out on the 1-minute chart, it won't layer onto the 15-minute and the hourly and clutter that hourly chart up. Yeah, it's super helpful because then it doesn't clutter all your higher time frames. So if you have different, I have a 5-minute, 1-minute here, then all this clutter in here doesn't get paired onto the 15 and mess this all up. You also can just, if you have specific presets, like if you want to use a gap that's specific to a specific time frame, like if you want to use this gap only on the 1-minute chart, you can go to your settings and go to your visibility tab, uncheck all of these and make this maybe like only 1 minute to 1 minute. Have that one checked and then save it as a template. And then that will create it where if you were to go to any other time frame, this fair value gap is not present. So I can show you right now if you want. Visibility will go 1 minute to the 2-minute. Hit OK. If I go to the 5-minute, the fair value gap won't be there. If I go to the 2-minute, it will be. And it's also helpful when you're just creating a daily bias. I like to use that. If you go to the hourly chart or the 4-hour and then drop down, as you can see, I didn't do it here, but now we got to be careful. Right now, we got to anticipate a potential reversal. I mean, it's difficult to see here. I'd like to see a displacement trade above 18,354 if we want to continue upside movement. But we have this imbalance here, which it could be used as inversion. We don't know yet. But think about this as a potential Judah swing in here. 930 to 10, creating the higher low. I'm going to allow this little portion outside of it, 2 minutes outside of the window. Time distortion maybe. But we're allowing for that to potentially be the low as well, just because we didn't put it within 10 o'clock. So at opening range, then you want to mark out your highs and lows. Same thing with 8:30. 8:30 to 9 o'clock, you want to mark out your highs and lows. And then that'll give you a framework for trade setups. So if we're likely to attack one side over the other, you wait for a retracement, either back in 50% of the range and then continuation, or a run on stops in the other way. Meaning if we have this range and we like to see this low taken out again, we trade back up into 50%, potentially into this gap, use a higher time frame PD array, either a 15-minute or a 5-minute PD array to trade into, wait for that 1-minute candle closure, and then a 1-minute market maker model as a result, down to the sell side. See the candle buys in here closing above 50%. All right, if I draw this line out really quickly, above 50% there. We have a down closing candle here, which we'd like to just watch. Okay, so anytime you have a potential reversal, that last up closing or that last down closing candle right before the reversal starts, you want to be kind of spectating. You want to be watching that to see if price is bouncing off of that a couple times, something like this, where we got a wick off of it. It's not going to happen all the time, but something like this candle here, you don't have a clear breaker until we pass below here, which would have been in your 930 candle, and you kind of would have missed that trade. So instead of a breaker formation, I'm looking at this last up closing candle. So as soon as we close below here, I'm using that as my quote unquote breaker, and that'll be your unicorn short, unicorn short as we trade into the gap, trade into the bearish order block here. And you can see the candle buys all holding that basically perfectly. And if you look at every single reversal candle, it happens a whole lot. Got one in here, extend that out. Last stop closing in here. Technically, that's your change in state, but right in here holding that, right? There's not a clear breaker. I mean, we have this tiny one in here, but that's the candle you could be looking for. Obviously, that's also outside of a kill zone too. Don't be using that. Right. Just to clarify, you're not looking for potential longs due to time, even extension to some sell side, so expecting a potential reversal. Exactly. So using the elements of time between 9:30 and 10, we're looking for that Judas swing. Just took out sell side. We're looking at, I mean, now this is holding, I would say, pretty well, right? That's your first stage of a reversal. This is technically a CISD. Change in state can either be a closure past an order block, right? Because that's an indication to you that we're changing the state of delivery from bearish to bullish or bullish to bearish. Same thing in here. We're now watching this as a change in state as we support the last down closing candle and close above a sibi. Same thing, you could be watching this order block. Get rid of some of this stuff now. And it doesn't mean I'm just going long in here. I would still like to see some sort of a framework for why we return into premium of this range. If you take our highest high at 930, lowest low. You can also drop your fib extensions on this too. I like for potential premium targets. A lot of times you want to take 930 to 1030. Like in here, you'd be looking for reversal. I'm not going to be longing that. Let's actually go back. I want to look at something. Now, also take into account the 830 opening price. If we're looking at just the AM session, you want to be dragging that 830 open out and think about your open high low close, your open low high close. So we have power of 3 on the daily, we have power of 3 everywhere, but you also have power of 3 within kill zones. So if we're bearish on the higher time frame and we want to see your open high low close going into the AM session, that means you want to see your 2022 model or your run on stops or your trade into your fair value gap all above your 830 opening price, right? Now, it's not going to happen all the time, but it's a high quality confluence with your normal setup. So if we take that 830 out, extend it here, and we're bearish, and you'd like to see it trade above there and create a 2022 model, well, trade into a 50-minute gap. We have our 830 opening price labeled out, trades above that 2022 model short. And if you look back at yesterday, we draw the 830 price out. We're bullish on the higher time frame. Here's your 830 open. I'm just going to save this as. Here's your 830 open. You can draw a box around if you want to. Below here, you're looking for your 2022 model to form within this range. You're looking for a run on stops, trade into a fair value gap. Either one, run on stops or a fair value gap fill. Then a market structure shift, breaker, fair value gap entry. And you can see that this entry we took yesterday with the fair value gap within macro time was still below 830, able to trade into that. Fair value gap here, even, oh, we missed the order block, but trades into there. Multiple opportunities, 1, 2, 3, 4, 5 opportunities below 830, all filling a gap. Trades into their 2022 model below 830, and you can ride it all the way up to the external buy side pools. I'm not using midnight. I think midnight's a little far, and it's also going to give you conflicting data. 830 is going to be the go-to. Nice little low risk buy after the sweep. right in here. And we can use that inversion gap too. This should be used as inversion. I mean, it's already being used. We have a bisi here. 10 a.m., 11 a.m., sell side sweep, market structure shift, fair value gap entry. Hey, you could be using that, right? That's within your model. Just because it's an opportunity, though, doesn't mean it's a setup. And this 20-point entry or exit would give you around that for value gap right there. I don't know if you can see it, but there's a gap right in here. So watch how we react. We have a high probability order block in here. And there's a couple of reasons why. Filling a fair value gap, that should already create a high probability order block. We have a fair value gap next to the order block after it was formed. So the fact that we're passing mean threshold here is somewhat of a concern to me. We really should not take out this low. 10-10 low should be set in place. I don't want to see that. And if you go back and look at all the fair value gaps that order blocks that we fill, order blocks that fill fair value gaps, I guess is what I'm trying to say. Gap in here, pulling a fair value gap from this last up closing candle, boom, runs it. If you look at all the gaps that I've marked out in some aspect, or all the order blocks I've marked out, are either CISD, which is this one right here, or they revolve around a gap fill or a gap creation. Here, filling a gap, trades back below, order block tap, boom. And this can be your high quality setup. Say you're not confident shorting this for value gap as the stop is so close and we're approaching 930. As soon as you run up and tap into this order block that filled a gap, you should understand that this is a high probability order block. This is also technically your propulsion block, right? As we trade into the change in state and we form another order block, this order block, trade down, order block, trade down. As we tap into that second one, you want to see a quick reaction, boom, right off of it. That's me done and dusted. 49 complaining. See y'all tomorrow. Yes, sir. No problem. We'll catch you tomorrow bright and early. So whenever you're marking out order blocks, it's going to be surrounding something either around a reversal, gap formation, or gap leave, I guess, is really your highest ones. If it's nothing to do with any of those, why are you marking it out? Or if we're tapping into, there's so many different things around order blocks. Like this, I would not be marking this out as an order block. It's such a small, different, it's such a small candle. You want to be using your most obvious ones. So it's a small candle. We're not filling a gap, or we're not creating it. Oh, we are creating a gap, I guess. Never mind. We're creating a gap right here. So yeah, you could use that, but I'm still looking at this down closing range as a higher probability order block for it to return back into. Okay, gap creation. Now what do we see? Gap creation, fills the gap, trades above it. This becomes a high probability order block. And you can see it, boom, flies off. Now we're trading. We see the reversal candle, trades into there. Down closing range, we have an up closing here. Fills a gap, fills a gap, fills a gap. If price was to return into that, that's a nice short. Here we have a up closing candle that creates a fair value gap. You can be shorting in that gap or as we tap the wick of the order block. So in this case, when you see an order block create a gap, not create a gap, but you know what I mean. Order block formed right as that gap is also formed. This is where you can use the wick of the order block to get in. Because sometimes you'll see it wick up into the wick and it won't reach the candle body. And you're like, okay, I missed my high quality entry. This is where you can refine it down. Like in here, if we were to trade back up into really any portion here, this is all up closing. But even up to the premium end, that's a nice short. This we were able to get short off this order block too. But if you go back and look at your 2022 models as well, 2022 and your market maker models, look where your optimal entries are. It's going to be in fair value gaps, but look at the highest high and the lowest lows on those low risk entries. Most times, price is going to be reverting back to a breaker or reverting back to an order block, which a breaker is an order block, just flipped. So we came back down, filled this gap. We're holding around mean threshold of the order block. I don't like how far these candle bodies are printing. You can actually switch time frames here and get a better view. There you go. So now you see the perspective of the order block you want to see. 2 minutes probably the best. Holds that 2 minute gap. Trade closes above mean threshold right there. And you could be looking for still 20 points into this gap. If you wanted to target that. And did we take out the bisi low? No. So still a valid setup. If you were going long in here, your stop would have to be below this on demo. Hey Flux, could you do a quick run through all the cells you took earlier again? Yeah, no problem. It'll be recorded on the live stream, so you can go back and watch the full in-depth explanation. But quick run through is hourly drawn liquidity to the sell side, just using market structure and order blocks. And that's really side topic. If you want to find high quality daily bias, it's going to be used three things. Three things are going to be your kind of what I'm looking at and what's going to frame your daily bias. Narrative. So what has price done? Where are the gaps? Where are the order blocks? Where's the most recent sell side or buy side sweep? That's your narrative. 2 is your institutional order flow. So how are the order blocks being held on the way up or the way down, or have they been broken? And 3 is your market structure. So I sent out the T-Trades video on advanced market structure. I also recorded one on my own because I think there was some errors in his own where he didn't label it. Anyways, so bearish market structure to the downside. 15-minute chart, London protraction, standard New York expansion, trades into a 15-minute gap. In here, prior to 9:30, looking for a 5-minute down closing candle to form as we fill this gap. We get it right here at 9:15. And then after 9:15, you're looking for a 1-minute market maker sell model, which we get a structure shift below that low, trades into a fair value gap, sells off. Yes, sir. Now you want to see this used as an inversion gap. We traded all the way down, all the way through. I mean, it's still, I guess, a bisi, right? As price taps into this premium end, we should not see it close really anywhere. I want to see this left open as a breakaway gap. There's so many colors, I know. My bad. But that should be left open as a breakaway gap. I can actually remove some of this stuff. Actually, I don't really want to. Fine bounce in there. Oh, we also tapped the new week opening gap too. That would have been a nice target. Right at the low end there at 10. Is that consequent encroachment? No, missed it. This in here should be used as an inversion. Pull that across. If we don't run this high, I'm going to abandon the bullish bias. All right, so we didn't use this as a breakaway at all. That's already kind of a first sign. Could pre-market dealing ranges have helped you further refine those shorts at the open? What do you mean by that? Like using fib extensions or just premium discount kind of stuff? I mean, you could have held it. Like, you could have held it down to this gap. And that's just using, you could be using fib extensions on here. This is your high to low. You want to run it, that's in between 2 to 2.5. And if you want to pull the manipulation leg as it right before it creates a breaker, that's your you can pull it there. You can also pull it, I guess, technically from here. I don't know the difference. I like to use it just from this manipulation leg. So yeah, you could have targeted -2 to -2.5, which lines up with this bearish for value gap. Instead of just pulling it right off the sell side here. Is this indicator wrong? Oh, of course. Well, that'll do it. Okay, well, then yeah, I should have taken partial off there. I didn't realize that was the wrong PM low. But for me, that's just a bread and butter short to complete a market maker sell. I'm not going to hold it really past this, especially as 930 opens expected to create sometimes a Judas swing. I like to just use that 930 candle to finish the trade, maybe going to 932, 933. As soon as that 20 points or the 40 points is given, I'm out. I don't want to be sitting in that candle for too long. The first 5-minute candle, the first 15-minute candle, because you know a lot of times that 930 is creating a Judas swing. So if you're using pre-market ideas to frame a 930 short or a 930 long, you got to be careful as it completes that market maker model. 930 most times will complete one market maker model and start a new one. You know, it's not going to be that exact 1-minute candle, but if you use the 15-minute candle or the 5-minute candle, it'll finish one on the lower time frames and start one on the higher time frames, or vice versa. 950 macro, you can be confident that you can hold for a decent amount, 20, 40 points. And as we get later into the day, you want to be holding for less. Really, your sweet spot for framing a trade to hold the rest of the session or for a decent run past 20 points is going to be between 945 and really 1030. That's kind of your go-to spot. If you're looking at an 8:30 news day, you want to be looking between 9:15 and 9:45, maybe 9:15 at the macro time. Because a lot of times your low probability setups are going to happen during silver bullet. I don't want to be placing trades before that. Preferably, I want to be in before 10 on an 8:30 news day. And if you go back here, in or around 10, I guess, this is right at 10:03. You could also be using this setup, 9:58. Reason being, you shift those time-based highs and lows over an hour. So 9:30 to 8 creates a high or low. 8:30 to 9 creates a higher low, and 9:30 to 10 creates a higher low. This right here is SMT. If you go to ES, this isn't swept, I don't believe. So there's kind of optimal times. We're still meandering around here. I can really care less. So we'll go ahead and wrap up the stream there. If you manage to get the 20 points in this fair value gap, great. If not, you got to be careful as we are reacting off of this 15-minute gap. Look for a 5-minute up closing candle, which we got. So I'm still anticipating it traded back into this 5-minute imbalance, or maybe up to this 18,369 level. Otherwise, I'm done for the day. Got 2 solid trade setups out of a low probability session. So if you decide to trade the rest of the day, be careful of the 1 p.m. news. Stay safe. Use your proper risk management, as always. Yeah, I appreciate you guys joining. It means a whole lot. You guys want to wake up wherever you are and join the stream. So I get some entertainment out of it too. Stream recording will be posted later today, within the next couple hours or so. So be on the lookout for that. Until I talk to you guys next time, stay safe and take care of yourself. Peace.